most businesses are profitable. It's when we start taking money for our personal needs that we sabotage the business. So it's important to keep in mind that all of the things that you're spending on are directly tied to the amount of money you're making in your business. So even though you want to keep them separate, it's a really good idea to go through and see, okay, this is on average. If I pay myself this much a month, I'll feel fulfilled. I won't feel the need to take additional money from the business. I'll have the ability to wait till next month for my next paycheck.
Welcome to the Online Genius Podcast, where host and renegade-thinking beer-brewing lawyer turned online entrepreneur Bobby Klinck proves that building and protecting your online genius doesn't have to be rocket science. Bobby and his expert guests break down online marketing and the legal stuff so you can stop sweating the small stuff and get back to building your amazing business. Now, here's your host, Bobby Klinck.
Hey there, welcome to episode 109 of the Online Genius Podcast. I'm your host, Bobby Klinck, and I'm excited for today's episode because I've got a guest on today. And we're talking about something that I think online entrepreneurs don't talk about enough. And that is the finances. That is talking about the money. And specifically, we're going to be talking about the concept of profit first. It's a well-known book kind of that isn't only for online entrepreneurs, but it's the concept of how to allocate money, not from an accounting perspective, but from a forward-looking planning perspective for your business. And I'll be honest with you, there was no way in God's green earth that I was going to try to do this episode by myself. Instead, I brought on a guest, and I brought on Amber Duggar. And she's the founder of Profit for Keeps, a system developed for online entrepreneurs to end the stress and anxiety around numbers. It's a holistic system combining personal finance and business cash flow strategies using Profit First and You Need a Budget, which is a software application. She's helped hundreds of coaches implement this system and has helped thousands more calculate revenue goals that actually make sense. She's a certified coach from IIN and worked in corporate finance for 15 years before venturing out on her own in 2015 and thrives on being location independent. She loves traveling, wine, bicycles, knitting, and a good cup of tea if in England and coffee if in Italy. She is a fantastic person. She's been in my community for a while, but more importantly, she's been on a number of podcasts that I listen to talking about this concept. And so this is something that I want to make sure that you have access to because I think she was fantastic. And I knew she would give some great advice. In the interview, we talk about how to run a profit first kind of financial system. And again, why this is different than like looking at your books or looking at your accounting, because candidly, you should not talk to your accountant about where you should be spending your money because your accountant is kind of they do an autopsy. They look at the past and tell you what has happened. You need someone who can help you kind of think through, okay, here's what I should be doing going forward. And that's what this profit first concept is about. That's what this interview is all about, is helping you do just that. So without further ado, here's my interview with Amber Duggar. Welcome to the show, Amber. I am so happy to have you here.
Thank you so much, Bobby. I'm so excited to be here.
Now, listeners, Amber and I actually live, I don't know, probably within 10 miles of each other. And we met online, never met in person, which is kind of funny that these things happen. But, you know, Amber, I'm excited to have you on here because I know that dealing with finances is something a lot of people don't want to deal with. And so I'm excited to talk about it. But before I do that, I always like to ask my guests something kind of interesting or funny about them, something somebody doesn't know. So what would you say about that? If I say, what's something just kind of interesting or funny about you that most people don't know?
Well, I would say I come up with two things. One's pretty on the far end of the spectrum and one's just kind of funny. So which one would you rather?
Let's do far end of the spectrum. To me, those are always the best.
Okay. When I was younger, my mother really wanted me to experience Take Your Daughter to Work Day. And she was a stay-at-home mom, and she wanted to find someone that could take me under their wing and and show me around. And she said, so Amber, what are you really, really interested in? And the first year I went to a t-shirt making company because she didn't ask that question. And it was the most boring day ever. And so the next year when she asked me, I said, I really feel like I sort of said this for just to see if she would do it. And part of it was because I was really interested in the human body. And I was 13 and I said, I'm really interested in learning about autopsies and like the human body.
Yeah, this is way out there.
And she landed an opportunity for me to go to the Albuquerque Medical Investigator's Office. And I ended up doing an internship with them later on when I was in high school with Dr. McFeely. And she was this very tall, beautiful doctor. And she showed me all there was to know about pathology. So I have performed 8 autopsies. That is a really weird, far out fact.
Well, I've got to say, you are the first person I think I've talked to in person who's performed autopsies. I used to be a prosecutor, so I talked with police officers who had attended autopsies, but never anyone who had been that involved. So that is truly far out there. It's a first, and I suspect it'll be the last of my guests here. But with that, I've got to pivot to the obvious pivot of talking about money because, autopsies, money, it makes perfect sense.
Go hand in hand, of course.
So I came across you when I was digging into this concept known as profit first. And I read the book, and for a long time, I was saying Mike's last name wrong. It's Michalowicz or Michalowicz?
Michalowicz, you got it.
Michalowicz. Yeah, I always said it Michalowicz. I don't remember, but I always said it wrong for a long time. But he wrote this great book called Profit First, which is about basically, well, why don't you tell me what it's about? Because you'll say it much better than I would.
Well, it's a beautiful, simple concept of instead of your business being sales minus expenses, the leftovers are your profit. It's intentionally paying your business first. So it's sales minus profit. The leftovers, what's left is what's available for expenses. And the concept is really just taking your money and organizing it into 4 buckets: profit, owner's pay, where you actually can pay yourself from that pile, taxes, and business expenses. So at the end of the day, you now know exactly what your money is doing for you. It's a very simple but profoundly impactful concept.
Yeah, and it was funny. I'll tell. This is a slightly funny story. My dad was in business. He ran businesses his whole life and owned businesses his whole life. I think he bought a drugstore chain from his father when he was like 32 years old or something. So I was reading Profit First when he was in town sometime, and I was talking about, I said, this is a great book. He said, I can tell from the title. Of course it's great. It was this self-evident idea, but you're right. I think for a lot of people, and I got to be honest, I'm guilty of this. A lot of times you just have all your money in one place. And so you just say, I'm going to spend some money, which that is not the way to do it. What is the problem with not kind of bucketing your money out?
Well, money is 99% emotional. And so when we look at our business bank account and we see thousands and thousands of dollars in there, it's easy to justify $1,000 expense or spending decision or a $200 spending decision because we see lots of money in there and we think, well, we're fine. What Profit First allows you to do is really see the intention and purpose behind all the money that's sitting there so that you can then be able to truly make an aware decision of where you're spending your money, because you'll see, okay, I'm taking it from this smaller but intentional pile for business expenses. I have these other business expenses I know I have every month. When I take those out, do I really have that extra money available? So you're now able to make decisions that are actually showing you what the money's doing versus just a big pile where you don't necessarily have it organized. It'd be similar, if we had everything tangibly done where we aren't using software and digital bank accounts and all this stuff. We used to do this, if we had all of our money, we wouldn't just keep it in a pile somewhere on a table, we would organize it. And the same goes for Profit First. It's allowing you to do that without it all being in front of you.
Yeah. And I'll add, like, I've heard way too many horror stories from entrepreneurs who end up with 6-figure bills from the IRS because they didn't plan for taxes. And I think that's one of the things that a lot of people don't think about is the government's going to take their money. And so you better be thinking about that and paying. Hopefully you're paying them every quarter, but at least you need to be banking the money every quarter so it's there. And I know so many entrepreneurs who get behind and then basically come April, they're trying to launch to pay last year's taxes.
Right.
It's a horrible thing to do. So I do want to ask this because some listeners may be thinking, okay, great. Look, I've got a bookkeeper. I've got an accountant. Isn't that all I need? What's the difference? And why do I need to be adding something else to deal with money? Because let's be honest, most entrepreneurs are visionaries, and this kind of detailed stuff, a lot of people are like, I don't want to deal with this. So why should we be doing it?
Such a great question. So I hear this a lot. Like, I have a bookkeeper. Do I actually need to do anything else? Like, why isn't my bookkeeper telling me that I need to be making this much money? Or why isn't my bookkeeper helping me with figuring this cash flow situation out? And the role of a bookkeeper, and I'm speaking specifically around the bookkeeping aspect. Now, bookkeepers can help in other areas, but it's not the same role as their bookkeeping function. A bookkeeper is looking backwards and ensuring that everything that's already happened is organized properly so that you can have all of your information very easily accessible for your accountant. And your accountant's main job is to ensure that you're not paying a penny more or a penny less than you're meant to come tax time. And they can help you with some strategies, but typically those two things are hand in hand looking backwards. Cash flow management, which is, by the way, cash flow is the number one reason that 87% of businesses go out of business, is because of cash flow issues. We don't currently, in our C-suite and corporations, we don't have someone that looks at cash flow management. And I believe that that is the number one reason why it continues to be a problem, because we have this big problem, but not an actual role to address it. So cash flow management is profit first. It is looking now and in the future saying, okay, how much do I actually need to be making to run this business in a way that pays me what I want to get paid to do the things I love to do, cover the business expenses I foresee in the next 6 to 12 months, and still have enough money to set aside for taxes so I'm never behind on tax payments, and still be profitable. And that is a very different function than bookkeeping.
Yeah. And in some sense, like I learned this, I guess, by osmosis maybe, or I don't know if that's the right way to put it, but back in my lawyering days, I often represented big public companies. And so I quickly understood that accounting, I don't want to say it's fake, but what your books say have nothing to do with, I don't want to say nothing, but they don't have a lot to do with how much money you have in the bank and how much money you can spend. And I think that's kind of something that people who are newer to business don't necessarily get, that there are big differences there. And again, like even mine, I use QuickBooks, I guess, for my bookkeeping. And luckily it tells me in advance. I mean, it tells me things like IRS payments that are going to have to come out. But if you're not using that, you might not recognize that there are IRS payments that are going to have to be made. And so you might think, oh, I've got an extra $5,000. No, you don't. That's not even there. So I really like that. Now, I do want to talk, though, for a second, because Profit First was not about online entrepreneurs. It was just a broader book. But I think one of the things I like about you, and I heard you on Amy Porterfield's podcast, and you talked about kind of how to apply this as an online entrepreneur. And can you talk about that a little bit? How do you actually employ this method of using the Profit First method in the online space?
Sure. Well, that's what I hear most, is that people read the book or they get to a certain point and then they see, oh, I have to pull financial statements. I don't have financial statements, especially not for 3 years. And so with online entrepreneurs, we're in a really amazing space. Like, this is the most exciting time because we have autonomy. We have the ability to have really low business expenses. And we can create things in which we can choose how it's going to be priced. We can choose all sorts of things based on, looking at the value that we're creating for our clients, et cetera. So in this space, we don't have a lot of issues that many big brick and mortar businesses have. So Mike was talking to businesses that are down the street, like the dry cleaner and the landscape person and things like that. With an online business, we're going into business because of typically some type of freedom of time or freedom of location or autonomy, not wanting to have to answer to someone. There's lots of different reasons, but it all comes down to some form of freedom. And with that, we are all visionaries. And so it's a lot easier for us to visualize what it is that we want. So the way that I like to apply Profit First to this type of business is to start with, what is it that brings you happiness? What is it that brings you into this high vibrational state? What are the things that you want to have around you, that you want to have for those you love? What is it that you want to provide in terms of experience and just general life, day-to-day things? What is it that really will give you joy? And that then can translate into a certain amount of money or resources that's required for that. And it's going to look different for everyone. Someone that's in DC, it's going to have to pay more typically for housing and things like that than someone in Topeka, Kansas. But the feeling will be the same. If you really love your house in Topeka, Kansas, or you love your house in DC, it just happens to be a different amount of money, right? So listing all of that down and getting clear on what it is that I want to be paying myself on a regular basis. Then looking at business expenses, same thing, looking to make sure that, yes, there are investments that are giving me value in my business and getting a number there. And reverse engineering it so that you have a revenue goal that is, as long as you meet or exceed that on a regular basis, and then use percentages based on that revenue goal instead of in the book, because the book is the same percentages for a $0 to $250,000 business, which many online entrepreneurs in the beginning stages are in that bucket. So that's not helpful. By having those percentages that are specific for your amount that you want to be paying yourself and your amount that you have for business expenses, you can then look at your business and see, okay, am I actually structured to be able to make this on a regular basis? What changes do I need to make? And it allows you to set yourself up for success from the very beginning versus always feeling like you're on a hamster wheel and trying to follow a system that's not really built for your type of business.
Yeah, and I think that's great. And I love that you start with what is it that you kind of need personally, because like that's something that I'm very open about it. I think I've told people this before. Part of my issue with my online business is, look, I was a lawyer. And so I'm trying to stop being a lawyer with my online business. Well, that means my income expectations are going to be much higher than if I was, this was a side hustle. And so you have to know that going in and have a sense of what you need to make. But let me talk for a minute, because once you reverse engineer it, and I know you don't believe there isn't like one precise number like Mike gives for 0 to 250,000, but what are kind of the general ranges for the different buckets that you mentioned? The profit, the owner's pay. Well, actually, before I get to that, I want to ask you that first. Why do we have profit and owner's pay separate if you're a solopreneur?
Great question. So with any business starting out or with multiple employees, we always want to be running a profitable business so that we don't have all of our resources all the time going towards paying ourselves or paying business expenses or taxes. It creates this new zero in your business. So instead of, and this is going along with Parkinson's law, our space will be filled where there is space available, right? And money will be spent where there is money. So if we have $100, we'll find a way to spend 100. If we have 200, we'll have a way to spend 200. It doesn't matter the amount of money. Typically, we'll find a purpose for it, whether it's really going in alignment with what we desire or not. We'll find a way to spend it. So the profit does a couple of different things. One, it allows you to start accumulating savings, if you will, or a stash, if you will, for business expenses or for when you may want to take a sabbatical, or there may be an unfortunate event and you just need to be able to have a little bit of extra resources there in an emergency. It's almost like an emergency fund for your business. And he recommends that you first just continue to have that accumulate until you have at least 3 months of operating expenses in there. The way that that's accumulated, though, is that once a quarter, So with owner's pay, you're paying yourself every month from that amount of money, but once a quarter, so that it's frequent enough that it is a bonus type of thing, but infrequent enough that you don't think of it as part of your salary. You'll take half of what's accumulated in that profit amount and that profit pile, and half of it will go into your profit vault. This is your emergency savings or stash. I don't like to call it emergency because then I feel like you're calling it in, but just think of it as like your stash. The other half, if you have existing debts, 99% of that distribution will go towards debt. The other 1% will still go to the owner so that you make the habit of celebrating your business. And I have had clients send me pictures of their turmeric latte on, sitting on a picnic overlooking the beach that's near their house saying, I'm celebrating my business today. And I also celebrated paying a chunk off of my credit card. If you don't have debt, then that other 50% goes to you as a bonus. And so I've seen clients go on vacation, they've bought new beds, all sorts of different things that they desire, but it's something above and beyond what you would normally have as your owner's pay or your regular salary.
Great. And I want to clarify a point there. When you say debt there, you're talking about business debt, not personal debt, right?
Actually, it can be either one because especially with solopreneurs, a lot of times our whole business life is really one thing, right? It's more integrated. And so a lot of times I see solopreneurs that have their debt on a consumer card, even though it was for business expenses.
The lawyer in me cringes about this.
Yeah. And it's really though more about how they're tracking it in their bookkeeping software. But you see it all the time.
Look, I know people do that. Look, listeners, just let me be clear. The sooner you separate all business and personal finances, the better you're going to be from a legal perspective. So I'm someone I've never had business debt. And so I've never incurred debt for my businesses, which I'm lucky for. So I know other people have, but what I would say is once you get to the point that you're established, this is me as the lawyer. If you want to have a credit card, have a business credit card and run your business expenses through there just to make it simple and clean. But we'll leave that aside.
100% agree. And the thing is, even a business credit card, though, that is still considered personal consumer debt.
Yeah, and you're right. And that's a point worth making. If you get a credit card in the name of your business, almost always it is your personal name on it. So, for example, they gave me a credit card when I started my law firm, when I opened my bank account, and I got the credit card and it just had Robert Klinck on it. It didn't even say Klinck LLC, because you're correct. It will almost always be consumer, and your name, you're all going to be on the hook because they're going to make you sign personally for it. So that's a good point. Okay, so we talked about the debt payoff and the other things. The other thing I wanted to ask you, though, is on the profit, once you have 3 months in your vault, your profit vault, what do you do then with that other 50% that you're keeping in the business?
Well, typically what happens, and I see this often, the 3 months is kind of an ongoing, as your business grows, your team grows, your expenses typically grow. So therefore your 3 months operating expenses grow.
Okay.
So that's one thing to keep in mind. Just know that as your business grows, your goal for that 3 months is going to change. And anytime you make a big change in your business, you would then need to then start to reallocate money there. And the other thing to point out there is that this is a recommendation of 3 months. Some people's risk tolerance is 6 months to a year. Others feel very comfortable with 1. So it's really up to you as well in terms of what feels right. I would not recommend anything less than 3, but I do know some businesses that really feel much more comfortable with the 12-month amount there.
Listeners, I'll tell you my goal, I'm not there yet, is to have 6 months in the business and 6 months personal, so that in some sense I've got a year of cushion between the two.
Mm-hmm. Yeah, that's great. And I think once you get to your goal, whatever it is, 3, 6 months, 12 months, this is where it can get fun, because you want to always ask yourself in the beginning, what is it that I actually truly want to be doing on an impact perspective? We all desire to be able to feel safe and secure and have our money. So that's so important to recognize that it's okay to start your business with that being the intention. Because a lot of times I think especially impact-driven entrepreneurs feel guilty about actually wanting to feel safe, and instead are always being told, oh, you need to be thinking about the impact, the impact. Yes, the impact is important, but until you feel full, until you feel safe, you're not going to be able to really fully focus on that impact. So once you do have that and you feel comfortable, then it's looking back at, okay, what other things can I do to either expand my business to increase my impact? So that could be what brick and mortar businesses would call a capital expansion, but you can do that in an online space. I can give you a direct example. Mike Michalowicz reached out to me and wanted me to write a book specifically for our online space. And it's a profit first derivative. That, of course, comes with a pretty hefty license fee. And so he actually coached me in saying, yes, it is okay to actually take it from your vault because you have over the 3 months. And so that is an expansion because it is definitely going to help really expand my voice and expand the message to everyone about how important it is to look at it from a different perspective. So that's an example, but it's just anything that you want to be able to just really build your business in the direction you see your business growing.
And let me ask, is that what you would often use for things like one-time expenses? Say, for example, you wanted to hire a designer to do a complete redesign of your website, and that's going to be if you hire a professional, it might be a $5,000 expense. Again, assuming you decide that that is a wise investment, would that normally be coming out of your business expenses or out of your profit vault after you have your 3 months?
No, I would definitely say that's more of a business expense, but you can definitely plan for it. So if you have something like a website that you want to redo, I recommend that every entrepreneur that goes through this process has a list of their business expenses and has an ongoing list of their personal expenses, and using the revenue calculator to see what their revenue goal is. And of course, check to make sure their business is hitting or exceeding that goal. When you want to bring on another expense, add it to the expense line, recalculate your goal, and see if you are already hitting or exceeding that goal. If you're not, then see what changes you need to make, and then you can start making those changes to make that additional revenue and then put that additional revenue towards the new expense. This would be for any new expense, whether it's a new contractor or something big like a website. It allows you to then see, okay, my business can actually afford or sustain putting aside money for this. And then you'll be in a much better cash position to go ahead and move forward with that expense.
So capital expenditure in a brick and mortar would be something that's pretty obvious. Maybe you're buying a piece of equipment or you're buying an asset in a sense. Is that? Give me, if you could, Amber, something in the online space other than your example of the licensing fee that you would say would fall in that extra profit, your profit vault that you would use that for.
Okay, well, some online businesses that get to a certain point that they realize, okay, I'm doing great here. I have a viable product. I'm launching on a regular basis. It's working really well. And then you typically identify something that could really help you move it to the next level. It might be working with someone who can simplify your funnels so that you're being very intentional with the client journey. It might be working with someone who has really been able to fine-tune messaging and branding and content development to a whole nother level where they're bringing in, people that can help with videography and things like that. So it could be an investment in your business to just bring you more reach. It could be an investment that just gives your client a much better experience. It's really just building on what you've already created, but above and beyond your normal expenses.
So would like a mastermind be something that might fit within that?
It definitely could, if you see that as being something that could absolutely amplify what you're already doing. Most of my clients do put masterminds in as part of their regular expenses and just plan for them as an ongoing expense. Okay.
So we've talked about profit, and now I want to ask you the question that I started to ask. Well, actually, before I get to that, let me ask you about owner's pay. For a simple sole proprietor or LLC, it's pretty simple. Whatever you put, like you said, you're going to pay yourself monthly probably, and you just write a check to yourself or electronically transfer. What about for people who have gone the next step and have an S Corp? This is something I was always confused about in looking at Mike's method. And just listeners, just so you know, if you have an S Corp, you have to pay yourself through payroll, which means it seems to me there's kind of a commingling of the owner's pay and the taxes. So how do you deal with that, Amber?
That's a great question. So I think a lot of companies and businesses are prematurely converting to an S Corp.
I agree.
But just know if you've already done it and you aren't paying yourself consistently, don't beat yourself up about it, but just know that anyone out there who hasn't converted to an S Corp, please hold off until you're making more money in your business, because it does complicate things. Now, this is not tax advice. This is not any legal advice. I'm simply just saying, based on experience with an S Corp, and I know that there's two ways that I see accountants handle it. One is they will simply pay quarterly taxes as the payroll, and this is only for a single employee, meaning you, the solopreneur. That is one way to do it, which is the simplest way, because then once a quarter, you're basically just taking those cash transactions and putting it against your tax bucket. I see most clients have set up is a regular monthly payroll where they are actually getting paid a salary and they're having taxes sent regularly to the federal and state entities. In that instance, the best way to do it is to ask if your payroll provider can separate out your different transactions that are being debited from your account. So one being your payroll that's going to go straight to your bank account, and then the others being the state and federal taxes. If you can do that, then just take the state and federal taxes from your tax bucket or from your tax pile, and your salary portion will be taken from your owner's pay pile. Because at the end of the day, whether you're paying it on a monthly basis, a quarterly basis, or once a year, your taxes need to come from your tax allocation, and your salary needs to come from your owner's salary allocation. And then any additional owner distributions would come from your owner's pay directly. And of course, any additional tax that's remaining there would help offset the tax bill at the end of the year.
Yeah. And the reason I asked this, so in my law firm, I no longer have an associate working for me, but I had an associate working for me. So there really wasn't a good way to do this, because even like the taxes, it wouldn't have been quite right for all of the taxes to come out of the tax, because of course my employees' taxes should be coming out of my business expenses.
Exactly.
So
yes.
It was that was one of those things that was mind bending to me. But I guess if you can't do that, worst case, maybe you just have a little bit of cushion in your expenses and then transfer out of taxes into that other bucket once you pay yourself.
No, I do have a client that does have everything come out, and he uses ADP. And so what we did was we went through his payroll reports one time, because they're pretty much the same, except near the end of the year, if anyone's paid over a certain amount, their FICA changes a bit. But basically, we would look at it and say, okay, on a regular payroll run, this is how much your taxes are, and this is how much everybody's taxes are. And we just do a split transaction to record both of those things, because we do use an envelope software, which makes it a little different. If you are doing it with the bank accounts, it can get a little more tricky, because at that point you're having to maybe keep track on the side and then make a transfer once a month of what really should be taxes versus business expenses.
Okay. And by the way, listeners, hopefully none of this applies to you. So
that's an advanced question.
Hopefully you can ignore the last 5 minutes. And I should have said something 5 minutes ago. But now I want to ask kind of the big question that I think a lot of people have is how much kind of in round numbers should be going into each of the buckets: the profit, the owner's pay, the taxes, and the business expenses.
So because we are all such very different situations as online business owners, there truly is not a straightforward answer to this. Now, I can tell you with profit, I recommend starting at 5% if you can, and, adjust that as you can. I see business owners now at 10, 12, 15% profit, and that just allows them to have much larger owner distributions each quarter. The other parts, and this is where I think it differs greatly between what the book reads and as online entrepreneurs, what we're doing, I truly don't see any, because I've looked at, I've worked with hundreds of clients and I haven't seen a correlation, because it really is more about what type of financial situation they're in terms of, is it a one income household? Do they have 5 children? Are they living in New York City in the Manhattan 3-bedroom apartment, or are they living in Bali in a $500 beautiful villa? It just really is so vastly different. So the more important thing, in my opinion, is really looking at what is it that you want to actually do with the money. Make sure that you have intention and purpose for the money that is coming in, and work backwards from there instead of looking at the percentages as some type of benchmark. If you really need a benchmark, you can definitely take that from the book. There's a whole chart in there, but I haven't actually seen online business owners benefit from going down that approach.
Now, you have a calculator that helps people do this, though, right?
Yes.
Where can my listeners find that? Because I think that's going to be the thing that a lot of people want to know is to set this up for planning purposes. Sure.
It's amberdugger.com/calculator. It's really simple.
Yeah, you like links like I do. They're pretty self-explanatory.
That's the easiest way. And for those spelling it out, it's Dugger, not AR. A lot of times that stupid TV show has really created an issue for my name. And no, I'm not related. And I did buy the amberdugger with an a.com to redirect my website.
Or do they have 2 G's or just one? I don't even know.
They have 2. It's exactly the same except with an A.
Okay. So now another thing I want to ask though is how about within business expenses? And I think you're going to have the same answer, but I think a lot of people have questions about like how much should they be spending in breaking down the business expenses between different buckets, meaning like marketing or advertising or things like that. Are there any rules that they should be applying there?
I think the main thing to think about is the only thing that can change especially for people that are launching on a regular basis, is separating out Facebook ads directly related to a launch versus awareness ads or just ongoing ads for people to, know, like, and trust you. Those would be considered business expenses, but the launch ads that are directly tied to launches can be considered, are not going to be necessarily the same percentage, right? Because if you figure out a certain launch that your Facebook ads are getting you a certain amount per lead, and the next launch is drastically different, your percentages are not going to be very helpful. So it's good to remove them from total revenue before you would use profit first.
And I'm glad you put it that way, because I know I actually had a discussion about this with someone on Facebook. And so listeners, the point of this is, and I don't think it's just launch. I think you'd agree it's launch, but Amber, anything maybe going to a sales page too might be, if you have like direct sales ads, would you take that out or would you include that in business expenses too?
Yeah, anything that's related to directly, you could tie it back to making revenue. Bringing in revenue is a better way to describe it. Above and beyond, like sales commission. So if you have a sales team and you're paying them a commission for the sale, or if you have retreats tied to your programs and you're including a retreat experience with the program, those are all considered materials or things that are directly tied to the total sale. So those are really important to take out before you would run them through your profit first distributions, because those are things that you're going to want to hold aside, because you wouldn't incur that expense unless you had made that sale.
Yeah. And listeners, if you think about it, because a lot of people will talk about they want to run their business at under 30 or 40% go into expenses. Well, during a launch, a lot of people, 50%, they'll pay 50% of the revenue in launch ads. And what Amber is saying is don't use the total revenue as your profit first that you run through the percentages, subtract out the cost of your ads, and then use the net number when you're running your profit first. So whatever your percentage is that you use for profit, owners pay, taxes, business expenses, then is from that net amount. So I'm glad we had that discussion, because I think that will help people.
Can I say one additional thing to that?
Sure.
The net amount also is what you would compare against your revenue goal that you're calculating as well. So if you know that you want to be making $50,000 on average a month in your business and you launch once a quarter, you want to be having a launch of at least $150,000 after Facebook ads. So that's just a really important thing to keep in mind.
Right. So yeah, if that obviously is absolutely correct if you're doing it. Now, how about, so Amber, I'm kind of weird. I've made a decision that I don't really run launch ads. Pretty much all of my ads are list building. And then I spend a tiny bit on retargeting my warm audience during launches, but that's it. So in my case, I should be running 100%, I should just be running 100% of revenue and not subtracting out the Facebook ads before doing the profit first. Is that right?
Absolutely. Yeah. And I don't think you're weird. I think that's a very smart tactic. I think the only time that launch ads are really effective is when you have a product that's a high enough price point that you're doing sales calls, and bringing in those sales calls, that can be very effective because then it does allow them to really understand if the product's right for them. But if you're doing a full straight to sales page, I personally think you're spot on with that strategy.
Yeah, I did an episode a while back talking about this, how I've got all these friends running ads and the cost to get people into a webinar, the cost to get people into a challenge, the cost to get people into a video series is going up and up and up. And so, we will be much better off in the long term doing the other route. So we addressed that, but let me talk for a second about how do you kind of put together the business kind of budget or whatever we're doing in Profit First with a personal budget and running the two together.
How do you go about doing that? Is that the question?
Yeah. I mean, again, and not the logistics, but how should we be thinking about, kind of, because the two are necessarily intermixed, other than obviously saying, hey, once I figure out what I need each month in my personal budget to get to, my Profit First numbers, is there anything else where the two kind of we need to be thinking about them together?
Well, I think in general, so as entrepreneurs where we're really building a life that we desire and the things that we want, they do go hand in hand. Obviously, from an administrator perspective, you want to keep them separate. But most businesses are profitable. It's when we start taking money for our personal needs that we sabotage the business. So it's important to keep in mind that all of the things that you're spending on are directly tied to the amount of money you're making in your business. So even though you want to keep them separate, it's a really good idea to go through and see, okay, this is on average, if I pay myself this much a month, I'll feel fulfilled. I won't feel the need to take additional money from the business. I'll have the ability to wait till next month for my next paycheck type thing. Instead of just a huge launch, okay, well now I have $40,000 extra in my bank account. Woohoo, let's go to Mexico with the whole family. Instead, you're thinking more specifically, okay, well, this is going to last me for the next 3 months, and this is how much I already agreed to pay myself. So instead, you're looking at this as reserves or being able to increase your runway instead of just looking at it as this big extra amount of money that you have available to yourself. And that can, in the long run, completely decrease the amount of anxiety and stress that one feels when the money starts to run out because the launch has, ended a couple months ago. So does that answer the question?
Yeah, it does. Let me probe a little bit deeper, because I think something that a lot of people struggle. I don't know, maybe other people don't struggle with it, but so people maybe who have some personal debt and they'd like to pay that off, and they have this big old bucket of money sitting over in their business account. Do you deal with this with your clients that sometimes they say, well, why shouldn't I just pay that to myself now so I can at least pay off these debts? If so, how do you deal with that mindset issue?
I hear this probably once, actually every single time I do office hours. So this is a very common question. And it's so intuitively you want to pay off the debt as soon as you can because you have that money there. But the thing that really helps people shift their mindset around this is this concept. If you look at your behavior up until this point, and that's been the behavior, which is, okay, I have extra money, I'm going to pay off my card. And it continues to reoccur, because what happens is now that the money's gone, another expense comes up and then money goes back on the card. So it creates this perpetual cycle of pay off, add back money onto the card, pay off, add back money onto the card. And it doesn't actually get the person to a point where they can use their own leverage. So this is all about timing. It has very little to do about whether or not you're making enough money. Most entrepreneurs are actually making enough money to cover everything. They're just working on either credit card float or they're working on a bit of debt. And so the idea is to age your money so that you now are using your own leverage when you have something that you desire. So what I say to clients that really want to pay that money off is we go back to the original plan, which is number one, make sure that you have 2 months of your paycheck stash or your salary or your owner's, the amount that you want to be paying yourself each month saved first. This is going to allow you, this is similar to Dave Ramsey's $1,000, right? Because what it's allowing you to do is have money available so that you don't have to put money back on a card if something unexpected happens. After that, that's when you can start paying down your card with additional money that you've made. But that goes after you've gone through the profit first allocations. So you're still going to put money to profit. You're still going to put money to owner's pay. You're still going to put money to taxes and put money to business expenses. If you use an envelope software, you're able to see where all the expenses, the business expenses, how far it goes out to. So if you've covered all your expenses for the current month and you've covered the expenses for the month after and the third month, then you know, okay, great, I'm good. I have those 2 months in my business as well. And any extra money that goes in there can go towards paying off debt. Same with your owner's pay. So it's a matter of first getting the 2 months saved so that you're not putting money back on the card. And then the extra money, once it's run through the profit calculator, above and beyond your normal monthly amount can go towards debt. And that's been a very effective way for people to pay it off without actually putting money back on the card.
Yeah. And obviously, listeners, you would need to adjust that. Like if you launch once a year and so all your money or most of your money comes once a year, obviously then you need more than 2 months. But
sure.
For a typical business where you have, money coming in on a regular basis, I think that's great advice. And I think I'm guessing part of what you're saying is that, part of what we need to be doing is building our, I don't know if we call it the financial muscle or whatever you want to call it, but building the practice of not overextending ourselves. And I think if you just take a big chunk of money and pay it, you're going to basically, like you said, you kind of just do the same thing and go through the same cycle. You've mentioned envelope software. And listeners, if you don't know, like the envelope system is this concept. So Dave Ramsey in personal finance talks about literally having physical envelopes, and you put the amount of cash budgeted for each different category in envelopes, and you pay with cash and you only use that cash. But Amber, you've been talking about kind of, I guess, a virtual envelope software. What is the software that you use?
So I use You Need a Budget, or YNAB, and Dave Ramsey has a similar one that's called Every Dollar. It's a similar situation, but it allows you to think of your bank account as a big pile, and then you can virtually separate out your money into the different intentions.
And is You Need a Budget, is it for businesses or is it business and personal?
So it allows you to create as many budgets as you want. So it is definitely marketed and niched for personal finance. And for a while, they were also marketing it for business. And even the founder wrote a book on business finances. And then he decided, as many of us do, to niche on a very specific audience. So he chose to do the personal finance. I've sat down with him over dinner with him and Mike Michalowicz together. That was a vision I had, and then it happened, and it was amazing. And they geeked out together. And it's because it's the same system. It's just one's for business, one's for personal. So you can absolutely use it for your business and personal. You just create 2 separate accounts. And so one is for personal and then one is for business. And it's been highly effective in terms of really being able to see a clear dashboard of your cash.
And so does that, it'll integrate with your bank account and all that, so it kind of pulls in all the data?
Yep, as long as you're in the US or Canada. For many years, though, no one could integrate, and it worked absolutely fine. I used it for many, many years without that. So anyone that's outside of the US or Canada, don't let this discourage you, because it's very usable without integrating.
Yeah, it's for someone like me, it's easier if it just pulls in the data. So otherwise, you just have to have someone enter the data, I assume, on an ongoing basis.
Yeah, and it's part of the magic of it, though, because by having the app and entering it in, you're consciously aware of when you're spending money and do you actually have the money to spend it. And then anything that's recurring, that you can create a recurring transaction regardless, so you're not having to enter that in all the time. But it really helps you get clarity on making sure that you're staying within your plan that you created for yourself.
No, that's a good way to think about it. So there are advantages if you have to do it manually. Now, Amber, is there anything I haven't asked you that I should have asked you about kind of business finances and how to set it all up as an online entrepreneur?
Well, I really just want to make it clear to everyone listening that if you've been listening and go, oh my gosh, I didn't really understand some of what they were talking about, that sounds really complicated. I just want to encourage you to download the calculator, run your numbers through it, because the number one most important thing in running a profitable business is understanding how much you personally need to be making on a regular basis to feel in flow and to have enough money to actually cover all the different things that you desire. And that is the number one most important thing that you can do to really help yourself set up for success, and look then at the strategy of, okay, now that I have this number, I can take this to my business coach, or I can take this to my planning session, and I can relook at my pricing. I can see how many spots would I actually have to sell. And it's a high level thinking that doesn't require you to do a whole bunch of detail, but it allows you to start to look at your business from a strategic standpoint and not having to count on someone to see whether or not your business is actually going to work. You have the control and power to do that. So I highly encourage you to check that out so that you can really be setting yourself up for success.
Look, I think that's such good advice on a couple of bases. Number one, you're saying be intentional. And I think being intentional, especially about money, is a hugely important thing to do. But also, once you know your numbers, you may, for example, and correct me if I'm wrong here, Amber, but you may decide, look, I can't afford all these expenses yet, so I'm going to have to get scrappy and maybe put more time in. Because on a lot of these things, you have to decide, am I going to put time in or am I going to put money in? But knowing those numbers helps you kind of make those decisions and prioritize what's most important on your spending list.
100%. And it also allows you to be very clear and aware of what your decisions are. Because if you know that when you apply everything, for example, you're in DCA and you apply everything, for example, and you start to hit really great launches, well, then you can look at that as, okay, I know that this works and I know that I have a viable product. You can intentionally spend money knowing that you will have a very good opportunity to be able to pay yourself back. But it has to be intentional, and it has to be going in recognizing that you don't have a crystal ball and you don't know for sure what's going to happen. It's when you go in without having any idea of what you need to be making, and then you end up spending more than you actually have available to you, that's when it becomes a problem. So it's really just making sure that you've planted a seed within yourself and your subconscious of what it truly looks like to have that type of business with those expenses and the amount that you want to be paying yourself.
And let me ask you this. The way you described that made a question come into my mind. And
Sure.
I'm not sure that this is exactly profit first. It kind of is, but when you're planning out a launch, right? And so you figure out what your goals are. And earlier we talked about, look, if you're running launch ads, those would normally not be part of your kind of profit first analysis. But you have to be realistic and say, well, I've only got $30,000 in the bank right now, so I can't spend $50,000 on launch ads. If that's kind of where you end up, I assume kind of this launch ultimately kind of fuels the next launch. Is that the way it tends to work?
Yeah, I mean, in an ideal situation, one would save money first by, having a side job or something where they have enough money to actually launch themselves with their first launch with cash, that then they could put aside money that comes in for their second launch. What tends to happen, though, is that people use a credit card or something else to do their first launch, and then they're always behind. And if that's the case, again, don't beat yourself up. Just know that that's really common and normal. And just to even have the goal of starting to put aside money to make it so that you are now ahead instead of behind is going to immensely decrease your stress when it comes to running launches. But I think that the more that you can put aside money ahead of time and move that age of money over into the positive direction, it just gives you a much greater sense of peace, and you're not thinking about the timing of cash flow. Instead, you're thinking about long-term strategy.
Yeah. And I think if you're able to do that, listeners like to use basically launch one's revenue to fuel launch two, and you're not running behind. What happens is you kind of get a positive snowball in a sense, because you're able to plow that money back into building your business, whether it's with lead ads, or if you don't listen to me and what Amber said and start running launch ads, that's fine. You can do that. But the point is, and you'll make more money because you spent more on ads to kind of build your list, build your business. And then so the launch two is bigger. So then you have more revenue from that. And so it allows you to kind of grow. So that's the way that it's best to do it if you can. But like Amber said, if you can't, you can't. And that's okay. So Amber, I want to thank you again. What is the address for that calculator for people to grab it?
It's Amber Duggar, AmberDugger.com/calculator.
Okay. And where else can people find you? Are you active on social? And if so, where should they find you on social?
Well, I have a Facebook group called Sweet Life Purposeful Money. Okay. And I'm also on Instagram at profit.with.amber.
Okay. And we'll have links to that in the show notes, listeners. Amber, thank you so much. This has been fantastic.
Thank you so much for having me, Bobby. This was so much fun.
Listeners, that's it for this week's episode of the Online Genius Podcast. I'll see you again next week.
Thanks for listening to the Online Genius Podcast. Make sure to tune in next week for more great tips, tricks, and strategies to help you build and protect your online genius.